All right, good morning. Today is October 30th, 2024. Tomorrow's Halloween, and tomorrow is the last trading day of October. Friday is November 1st, and the election is, like 6 days away. So it's uh, it's a pretty interesting environment right now, and the market's actually when you look at the daily time frame, it's been kind of dull, but there's been lots of intraday action. There's been lots going on, and I'm going to keep the show at 30 minutes as usual because I know that everybody's attention span has been diminished over the years. I know mine has. I talked about that last week. So I try and keep these at 30 minutes. I mean, you guys know from years ago I can sit here and talk about the market and trading and all that for hours on end, but I'm not going to do that. So let's dive right into it here. I brought this chart a couple of weeks ago on October 16th, right, when we were there, but what I want to focus on now is where we are right now, which is literally like right here, interestingly enough. And the funny thing is the market looks kind of like this, right? This is the seasonals going back to 1928, which is crazy to begin with. I see a lot of historical charts, and funny thing is they start them like at a certain point in time, and of course, you can cherry pick easily by when you begin your data graph. But anyway, the main point here to take away is that November is Friday, right? And look at the seasonality of November, and that's a pretty darn big sample size there. So in theory, and of course, I always joke about seasonality because, like I mentioned when I originally brought this chart a couple of weeks ago, you take years like 2018 and all of the seasonality and historical analogs and all that didn't amount to anything because it just didn't work that year. But it's always fun to look at this type of thing. So it would make me a little bit nervous if I was short because seasonally speaking, November is one of the strongest months of the year. The funny thing is, October, we talked about this too at the time. October is typically a flat month, right? I got the SPY up here. We'll look at the SPX in a second, but I just happen to be looking at the SPY chart actually has a more accurate view of today's open, and that's why I like to look at it. If you trade futures, you might know this, but if you want to look at how the session actually manifested on any particular day, especially going by the open, like when I pull up the SPX chart, the open's going to look totally different than this, right? But anyway, back to what I was saying a second ago, October is usually a nothing month for the market, and this October sort of bucked the trend, right? I mean, here we are up at all-time highs. But the thing to note here. Oh, and by the way, speaking of the intraday session, like today, the market, the first thing it did is open, and then it sort of tanked, right? Look at this 5-minute chart. I mean, it just tanked right out of the gate. There we are. So there's the first 15 minutes of the session. It opened and then just, had a big sell down, and then look at this rebound. So that's kind of interesting to look at. So anyway, let's go to the actual SPX here because I have my marks on this chart. So for some reason it says not saved, and I drew that box on the chart. What in the world? I drew the box on the chart last week or the week before. I don't even remember, but you guys remember I drew this box here. So I extended it a little bit. I actually moved it just a little bit, right? I moved it to the left to encompass this high right here, right? You see this day right here, and The high was like 5,800 basically, and then the low, I believe was this last Wednesday? Might have been. Anyway, look at the wick at the bottom of that candle and look at the close. And so, 5,800, you can just tell by looking at this is a pretty solid level of support. And of course, the funny thing is, so the market broke out over here, and then it got a continuation, and then it faked everybody out by gapping up here and selling down, and then we got that big down day, and then it recovered half of it. And so the market's basically what you're looking at is limbo for the past 2 weeks. It's just range bound, right? It's trapped in this big sort of range here. There's the big round number 5,900 above and 5,800 below. And so that's basically, the over under right there. And we're basically almost right smack in the middle of that range. And my guess is, and I mean, it's hard to know how much is priced in the market based on the election. And so that's kind of the wild card. And I suspect that that's why we're sort of range bound here, is that the election's a big deal to a lot of people. Personally, I despise politics, and I'll be so glad when it's over. I hate hearing about it. I've already voted. I just don't like politics. I think it's a waste of time, to be honest with you. People take it way too seriously, like they do, certain sports. I enjoy watching sports, but in the big scheme of things, you can only take it so seriously. So hopefully I didn't offend anybody, because I don't take sports or politics extremely seriously, because um, like I said, in the big scheme of things, they're just not all that important. Even though, some people enjoy it. Like, I enjoy stuff, but that doesn't mean that I take it too seriously. Anyway, lots of crazy stuff going on. Let's look at the NASDAQ real quick, or should I say the NASDAQ 100? Because as you know, the NASDAQ 100 still hasn't hit a new high yet, which seems kind of interesting. Let me flip over to a weekly chart here. Actually, I wanted to look at a weekly chart of the S&P, but the weekly chart's a little bit different story, right? This thing is actually, it's within spitting distance of the all-time high. When you look at this, you can basically say, Q's at 500 is basically the all-time high. I mean, it is the all-time high, but that daily chart shows that there's a little bit of overhead resistance. We're right in the thick of earnings here. Let's look at AMD, because AMD came out, and lo and behold, and this is let's look at the weekly chart here just to get some perspective. Yeah, this is kind of interesting. This I could draw a trend line down across these highs, but basically on the weekly chart you had a pivot high a few weeks ago, and so this week's kind of been all over the map, but I guess they beat earnings, and the guidance wasn't all that great, something like that. I didn't listen. I believe they interviewed the CEO on CNBC this morning, but this is why looking at multiple time frames is useful, and I always advocate multiple time frames, right? In theory, if I'm analyzing a stock, say, I'm going to start with, I may or may not look at the monthly, but I'm definitely going to look at the weekly chart and then the daily chart. And so sometimes these weekly charts, like if you were thinking about buying this thing anytime in the past couple of weeks, you could look at this weekly chart and be like, well, we had this run up, and then there's this pivot high, and it's been selling down, and so you probably would want to just hold on. And of course, I don't advocate buying anything ahead of earnings, to be honest with you. So that's a pretty big gap down there. The funny thing is, on the daily time frame, it had, and of course everybody's time frame is different. See, that's one of the things that is very seldom discussed, to be honest with you, and it's It's something that it's just kind of funny because over all these years, I've been saying that look at that absolute textbook. I mean, that's a textbook pivot low right there. Like that little pattern right there. Textbook pivot low. And so, on a very short-term basis, that was definitely tradable. Definitely tradable, but holding over earnings, you guys know for years that we have always said, hey, holding over earnings is a crapshoot. So you get these, and especially you get these earnings run ups, and then all of a sudden, sometimes they gap up after hours, and then the conference call they sell off, and this and that. Speaking of earnings, so anyways, before I leave this, AMD is just sort of in limbo here. It'll be interesting to see how it sort of manifests, but it's kind of there's the 200-day moving average too. So it's below that big sort of overhead trend line, and as much as I kind of like this stock, back over here, remember we talked about this big W pattern. Well, it broke out of the W and got some pretty decent, a little bit of follow through, but it is what it is. Let's talk about, and I'm sure you guys heard this already, this SMCI. This is so their auditors, Ernst and Young, quit, and that's the big news story. You guys remember this thing split 10 for 1, right? This was a $1,200 stock. Let's look at the monthly chart. The monthly chart, because this is the thing about these type of stocks. I mean, everybody that follows the market closely is familiar with this stock because it was when it had this run up here, right? And picture this, it was 250 bucks and it ran up to $1,200 in a few weeks. And it was what that is just a parabolic run up, unsustainable parabolic run up, and then, it collapsed. And quite frankly, this chart looks just like, very similar to a chart of the South Seas bubble, right? Every other parabolic run up like this, what you get is you get the initial sell off, you typically get a bounce, and this is the weekly chart again. And then you get the big Eiffel Tower sort of pattern. So, I mean, I could squeeze this down and it's not quite the Eiffel Tower pattern. I've seen worse. Some of them don't actually get a significant bounce sort of on the right side of the parabolic move back down. But anyway, you can see how this ran up. So, but here's what's crazy. This is even crazier. So I've been noticing lately. Well, I've known for a long time that there's these, there's leveraged, I don't know if you call them ETFs or ETNs. Anyway, hang on. SMCX. This is crazy, right? So, it's a weekly chart. So back in the summertime, when this stock was going absolutely parabolic, somebody thought it was a good idea to come out with a leveraged single stock, 2 times long that stock. And so, there's the same thing. Like, Tesla's got 2 times long and 2 times short, and all these other stocks do. So it's basically, in my opinion, it's basically just one of these, just another Wall Street scam. And they shouldn't even be allowed to. Is this thing halted? Because it should be down here. This SMCX on the daily. I don't see today's candle on here. Let me try that again. SMCX. Oh, there it is. All right, I had to type it in. Look at that. So here you go. So it's down over 50% today. Anyway, what I was saying before, like these sort of Wall Street scam type things. I remember years ago when they came out with the leveraged ETFs, right, on the indexes. And at first they seemed great, and then after a while everybody started realizing that they're rebalanced daily. And so you take something like SPXL, right? That's So that's like 3 times long the S&P, and then there's SPXU. And quite frankly, I quit. So this is ultra short the S&P. And if you look at these things, see, here's the problem. Ultra short the S&P. So this thing, $40,000. This thing has reverse split, probably 50 times since then, and it's basically, and this is how they're designed. Like, especially the short ones. The short ones are even worse because, well, let's look at SPXS. This is the 2 times short. Oh no, I'm sorry, it's 3 times short. So, there's another example from $12,000 to 6. Let's look at the SPXU. Anyway, here's my point. Stay away from these things. Oh, okay, and so, well, that one's short too. I'm sorry, SPXL is the one I was looking for. Yeah, there you go. So, the long ones, I suppose, I don't know. If you think about this, I mean, look at this. Look at these moves here. These moves they just get so exaggerated because this is triple long the S&P, by the way. Anyway, I don't even want to get into that, but there you go. The whole thing about having the single stock ones just doesn't make any sense to me. Especially on, whoops, jeez. I'm still, well, I had 1 cup of coffee, but I'm still working on my coffee here. Oh, let's see. Let's look at Apple real quick. I got to click on something else on my chart here because it's all skewed. So Apple's earnings, look at that. Earnings on Halloween tomorrow. So that's going to be really interesting. This is a pretty interesting pattern right here, right? And this is sort of an outlier. I don't remember what happened that day, whether that was, I mean, I don't remember what it was. Recently there's been some talk about, whether iPhone sales have slowed down and all that stuff. And sometimes there's, a news story or something obviously happened that morning for Apple to gap down like that. But that's kind of what you call just a major shakeout. Huge gap down to try and take out everybody's stops, and then it just rallies right back up into the pattern. If you erased that candle there, it would look like, just normal trading pattern. So, Apple's got kind of a little, it's consolidating here and it's tightening up right under the highs, and earnings are coming out tomorrow. So it's going to be really interesting. See how that plays out. I might as well click on AMD again because it's next to my list here. Yeah, so there's the trend line I had drawn. This is actually a pretty good example of, what you call a fake out, because there's that pivot high we looked at on the weekly chart, and that's why sometimes it's a good idea to look at a weekly chart. This is the problem with trend lines, and I've talked about this before. So, hey, in the past I've always been like a real nerd about getting my trend lines like perfect, as perfect of a fit as possible, and then I also talk about, how a valid breakout doesn't mean, a few pixels. Just imagine for a minute all the people that drew this trend line here, and when it broke out here, they thought, okay, man, this is it. This is a trend line break, and so, they would have jumped in right here. And then the next thing you know, you got a sell down, and so so what do? Geez, I don't know. I mean, I had this little sort of, we talked about the W here, right? And we talked about it back over here, and it did break out of that, and came back and retested it and got a little follow through. So I mean, hey, there was potentially, $12, $15 worth of a trade here, but that's what goes back to what I'm saying about time frame. It just all depends on your time frame. In theory, if you wanted to make a quick trade in this thing, there was a trade there, like I said, 10, $15, but you would have had to sort of bail back out when the pattern and patterns fail all the time. Here's another one I wanted to look at because it was we talked about this. Was it last week? Yeah, last week and the week before. So here's one that didn't fail, but the funny thing is, obviously this is an earnings pop here. And what a setup. That's why I wanted to come back and look at this, because I was talking last week about how constructive Google looked, and I drew this, a while back, and it had, remember I talked about that sort of inverse head and shoulders pattern, and so, I mean, it was perfectly set up, but taking the leap of faith, especially yesterday. Like yesterday was the day where you would have had to take the leap of faith and say, wow, look at the, and so now, I mean, and of course this is, I should switch this to a candlestick. Yeah, look at this. So these stock charts, like if you just go to a generic candlestick, they're hollow. Most of them, the green candles are hollow. So I have a love-hate relationship with these stock charts, to be honest with you. I talk about that a lot. So this is interesting right here. So here's a very similar pattern to what we just looked at with AMD, right? The big sort of, and I'll bet you that if you went back to AMD, the high was hit here and the high was hit here just about the same time, because a lot of these, stocks trade sort of in tandem. Anyway, long story short, so this is another one we talked about recently. You're getting that sort of breakout here this week of this trend line, but look at that. There's that overhead resistance. And look at today. Today I got to look at the 5-minute chart just to see if it matches the pattern. Yeah, so it had a big gap up, sold down and closed the gap, and now it's bouncing. That's very unusual. And the reason I had to pull that up is because I'm looking at this particular candle today, and it's highly unusual. Right? I mean, you don't see a whole lot of those on the, well, actually you see a few of them, but this is a little unusual for today's session, I should say. Anyway, I don't have when the earnings are marked on this. It could be today, it could be any day, but that's the thing about earnings season. I mean, you really have to, if you're holding the stock for the longer term. And years ago, many years ago, 10 years ago, I had one of our customers that I knew pretty well and talked to him quite a bit on the phone, and he told me that he had a bunch of Microsoft that I guess he bought ages ago. He said he couldn't sell it for tax reasons. He said if he sold his stock, he'd owe so much taxes that he was just going to hang on to it. So everybody's got a little bit different sort of, approach to it. That was just really, it got me thinking, because a lot of people don't, they just don't really take that into consideration. And so there's a big difference between short-term trading and gambling over earnings. I know it's the big thing nowadays is for people to trade options and put on like exotic sort of options, collars and contracts in that ahead of earnings, right? Which there's nothing wrong with that if that's your trading style. Let's take a look at NVIDIA here. NVIDIA, nice little pattern here. I don't always ignore them, but I do kind of ignore these outlier sort of price bars, right? Because they don't really mean a whole lot. So basically what you got, we had the W pattern, we talked about that, and it's not uncommon to see it break out and you get a little bit of follow through and then come back and retest it, or I mean, you just don't know, right? You just don't know, but sometimes they break out of the W and then they never look back. And so this will be interesting to see how this turns out. And we obviously won't know on this one for a while, but let me switch to a weekly chart here just so we can get sort of the bigger picture. Yeah, the weekly chart of Nvidia is it's a little bit scary because I always look for symmetry on the charts, and that was a parabolic run up there on especially on the weekly chart. Parabolic run up and then extremely significant sell off. Look at how the sell off ended with this humongous gap down. See, that's something else I look for. Quite frankly, that's probably people probably sell training courses on that, but if you get a big sustained significant sell off and the duration is important, but so you get a parabolic run up like this or whatever, but the duration of this sell off, this is a weekly chart, and when as soon as you get a humongous gap up or down, that typically, more times than not, a big run up or a big sell off is going to end with a significant gap, and then that's where the trend changes, right? And so that's a good example of it. That's kind of hard to play because especially with earnings, because it doesn't necessarily mean if a stock's going down and then and then it gaps down real big that it's just going to turn right back around. So it's a little bit tricky. Let me pick SOXL out of my list here. And the reason I want to do that is because I was talking about the leveraged. For some reason, nobody wants to fool around with SMH, which is the semiconductors. Everybody looks at this SOXL, but let's just look at SMH. I wanted to see what that looked like before I pulled this up. Yeah, you can see the difference. Weekly chart here. I guess I'm really kind of surprised with AMD. With AMD, down fairly significantly, that this is not a little bit lower, but yeah, this is part of the driver of the market right here, is the semiconductors, and they have been since the dot-com bubble. So yeah, this is kind of interesting too. It's obviously it's not up at the highs, right? But look at that, kind of and this is a weekly chart. So you had kind of a parabolic run up and then a parabolic sell down, and this is exactly what I was talking about. So look at these three big down weeks in a row. First of all, you had a pivot high, and then you had three big down weeks in a row, and then that humongous, I shouldn't say humongous, significant gap down, and then that was it. So, and of course that's that's something that's probably covered in most of the technical analysis books, but let's look at I didn't want to look at I didn't want to look at the TLT. I wanted to look at the TNX. This is the important one here. This 10-year treasury yield, and I don't know if this is real time or not, but the crazy thing is the Fed cut interest rates 50 basis points, right? And then interest rates started going up, and that's that's where all the consternation is sort of about. So I saw something this morning on the internet to the effect of, stocks are at an all-time high, gold's at an all-time high, I mean everything's at an all-time high, and so it's basically just, the effect of it's inflation. It's the effect of interest rates being suppressed by the central banks for all those years, for a generation. So has repercussions. Yeah, well, this is a pretty interesting chart here because, and I probably should have just looked at a weekly chart, but, well, actually, let's do that. Let's look at a weekly chart of this. I want to get some bigger perspective here. Heck, let's look at a monthly chart. It's like I'm running out of time here. Yeah, here you go. This is what I was talking about. This sort of Yeah, this is practically a generation, right? I mean, 19 interest rates peaked way up here. As you recall, this was, the 70s, and inflation was out of control, and they had to raise interest rates to 15%, basically. You remember that, the Volcker and all that stuff. So I shouldn't say you remember it because I don't remember it. I was too young. But anyway, here's what you got is you have, basically a generation of interest rates declining, and at the same time, um, the result of this is inflating asset prices. I mean, this is why, this is why everything's at new highs, and I don't even have time to get into that. But long story short, so on a monthly interest rate cycle, this is something to worry about here. Especially with the U.S. national debt approaching $36 trillion. People are talking about, it's at 35.8 now, so people are talking about whether it'll hit 36 trillion by the election, which is next week. So, yeah, this is something to keep an eye on. When you take a longer term look at this, man, if this breaks out to the upside, it's already kind of a miracle that, and you've probably been reading this for a while, that one of them's wrong. Either the stocks are wrong or the bond market's wrong. But this rise in interest rates, and especially this short-term rise here since the Fed started cutting rates, is is wacky. It's sort of it's unconventional. It should make you nervous. So I'll go back to a daily chart. Yeah, I could do a whole conversation about that, but and I could also, right now it kind of reminds me a little bit of, and I've said this, a long time, that the environment reminds me a little bit of the dot-com bubble. So, I mean, stocks are clearly overvalued. I mean, I was looking at AMD and I didn't even realize this because I don't look at PE ratios much anymore, but I think the PE ratio on AMD is like 100 and something. And that got me thinking, oh, well, I remember, back in the old days when PE ratios mattered. And so now you have like by any historical standard, price to sales ratio. We've looked at the Buffett indicator the past couple of weeks, how, the Wilshire 5000 to GDP is like 200%. It's never been that high in history. And so, everybody knows that the market's overvalued. So the question is, can it stay overvalued forever? Well, it has for a long time. Um, so anyway, that's all for another time. I want to thank you for tuning in. We'll pick up where we left off next week, same time, same place. I will see you then.